Glow Warriors. How's everyone doing today? Hello, Sinatra. I'm doing fine. See, Corona hasn't gotten me yet. I'm still here wearing my silver crown. So, okay. Uh, I saw Steve Skyping about some unusual things going on with the gold market. I know some brokers have stopped offering it. I'm not sure. We'll get Steve's take in a little while. I look sick. That's a compliment. Thank you. All right. So I just want to give you a little bit of history on how they can. Yeah. Okay. Steve's going to talk about how they can rig the game. Okay. So I'll take you back to 1979, 1980. Right. What was going on in gold? We had a bull market in gold, but the real play was in silver. We had the Hunts brothers; they were in a squeeze, right? So, that was the first time silver saw $50. Okay, so they changed the rules. Yeah, always rigged. They changed the rules to liquidation only, and they raised margins ridiculously. And then rates were going up under the Volcker regime, the great liquidator. So silver peaked at 50. They had several limit down days. So, limits aren't anything new to the markets if you haven't been around for a while. In fact, they were more widely used back in the 70s and 80s, limit moves. So this may be here to stay. Anyway, they can be successful. So anyway, I'd be careful if you see the gold trading back under this moving average, which is 4 hour 50 at 1596. That's going to open up some space for it. Last night, actually, this is what was going on in Asia. So on the 1 hour, it was confirmed, but I've had to go to 15-minute charts in this environment to manage risk better and not look at even 1 hour candles where the ranges are kind of big for me. Anyway, that's what's happening in gold. So, I'll just put out the contrarian case, which, is probably a low probability, but, I'm open to everything. I used to, if I had a view, that was the only view, I could see how people are looking for new highs in gold. But I think very few people would be looking for something like this from up here. All right. So we almost got to 78.6 here. Miss it by a few bucks, and my fibs could be off if I didn't lock it. See, I missed the high of this candle right here. Okay. And yeah, getting a little distracted. But what if we had equality, which was about 250 bucks from around today's highs? Well, coincidentally, that would take you back near this breakout right here. Now, this was a weekly breakout that launched this bull market, right? So if we had one, two, or A, B, and C, and had a quality of 250, it's going to take you a little shade under 1400 here. And if it's a fib extension, maybe we're coming all the way back down to the breakout. So just a little bit of a Phil Donahue contrarian view. They start blowing through 1650, and then, I'd say that's off and just something for you to consider. And here's the S&Ps. So we broke out yesterday. Looks like a turn to me. And for this low to hold, pullbacks have to hold 2300. Should really hold 24 since this is a little breakout of an ascending triangle, which measures up to about a little less than 38% back, 2630. So we'll see if we're going to go there. I think there's more left for short squeezes in the S&Ps, and maybe you buy dips instead of selling rips until this plays out. Ben Maldonado is looking for cycle highs around the third week in April. So that gives us about a month of correction, potential for correction. So, just watch your fibs. I talked about this falling wedge, which, looks ridiculous. If you believe in wedges, though, and you cover up the title again of S&Ps, wedges retrace 100%. So here you're talking above 3,000. I think oil has the coronavirus. Anyone else think that? Because it's really sick. It really didn't get any lift when the S&Ps recovered. When the dollar weakened, just basically, still moving sideways. Hasn't made a new low yet, but I'd like to see one more flush, one more low under here, and then I'd go for the crude oil. And that's all I have, except for this. This is the most important message I have today. Join. We haven't had markets like this in 110 years. Okay. I don't know how things traded during the pandemic of 1917, 1918. I don't know what happened, but this volatility can be your friend or adversary, depending upon your discipline and money management. And you have a professional team. I think the best team on the net. Though you guys could say I'm subjective. Okay, I am. Show me a better one. Go ahead, Blake and Grega and Stell. Steve, one of the best traders I know. There's that charlatan, Dale Pinkert. Joe Perry, a veteran. Paul Franco, helping people during the European crossover. Andre, showing harmonics. Amanda, a great scalper in our members chat. So find a stronger team and then find a better deal. So it's a no-brainer. But use your brain and have this access. Okay. So be able to know if things are lining up. Let's see what the gold is. I don't know if Greg is going to be here this week. Yeah, things are crazy. Corona, fear that I'll own you. Born in a lab in China, spreading so I'll find you. No one is safe, not even a king, and I'll be the excuse for everything. And look what this guy tweeted to me. Okay, Chris, if you're here in the webinar, we start, yeah, okay. We start in 50 minutes, okay? We start in 50 minutes. But I guess one of the royals, yeah, was tested positive. Prince of Wales. See, no one is safe, not even a king. Okay. So, Chris, if you're in the house, you could come back or you could hang out and listen to one of the best teams on the net in Forex. And one of the best I know is Blake Morrow. Blake, how are you handling all this action here from last night?
Good.
Good.
Yeah, just I was just in the middle of doing something.
Oh, you want I want to ask Steve about what he was talking about in the gold market, but we could do that if you're tied up.
You know what? The funny thing is, I really wanted to ask Steve about the gold market because this
Okay.
is the disparity between what we're seeing in physical prices and in spot prices. It's got me a little confused. I was obviously very bullish going into this weekend
Yeah, you
with
were.
gold, and I was
Yeah.
long, and I took my profits a little early, you could say. But we've seen this really big, movement in gold, and so I guess maybe Steve, are you here?
I am.
Yeah. He's
Okay.
I assume Stelios is here as well.
Oh,
no, he has a
isn't
dinner.
he? He's not here yet. He's going to be here in a little bit, right?
No, I think he's
I
taking the day off at some kind of
It's
holiday in Greece.
it's
yeah,
Greek
I'm
Easter.
Greek as well. I thought.
You know what? I don't think you're a real Greek though. You're not a
You
real
actually,
Greek.
actually, there is a day off, but when you are in the house, like it or not, what is the difference between between a holiday and a working day?
True, true. That's a good point. So could you explain to us and about the difference between spot and physical because gold? Because what we are seeing is we're seeing a rally in futures, and spot prices are what 50, 60 points away.
Yeah, we've seen some periods of time during the past few days that there is a huge divergence between the price of spot and futures. We've also seen some worrying signs. For example, ABN AMRO, in essence, notified customers that that had a product which allowed them to put their money in physical gold, silver, and platinum.
These are these
That
ETNs, right? Or what do they call them if you're not in the United States and you're like, let's say,
CFDs.
is it
Yeah,
CFDs?
but that was not a CFD. It was like a bank product that you could put your money in, supposedly in this thing that held physical to back up your claim. So in essence, people that wanted to have exposure in physical, they created that product so you could own part of that product, knowing that the bank is holding the equivalent um, in physical gold, silver, and platinum. So they got notified that effective this Friday, they're discontinuing this product, and anybody that doesn't actually liquidate is going to be liquidated by default on Friday by the bank on whatever price they have at that point. So what does that tell you? What
They
it
don't
tells
have the
me,
physical.
they don't have the physical. Exactly. So
And
they
there's
were
there's
promising.
that big disparity between cash. You know, when silver got cratered, Blake, last week
Yeah, yeah.
around 1150, I know guys that went out to buy physical. You know what a good deal was? $4 over spot. So even though silver was trading, say $12, you were paying
I haven't
16.
found out of
16.
curiosity. I looked around because I saw David Brady was also tweeting about it since a couple of weeks
Yeah,
ago.
yeah, he
I
was buying
started
that
looking.
day.
I started looking around. The only way you could actually get physical is by paying silver, especially was by paying a hefty premium,
Four
and
bucks.
even by paying a hefty premium, in many cases, in most cases, you had to wait 2 to 4 weeks for that to
For
get delivered
delivery.
to you.
Uh,
Yeah. So going back to the ABN AMRO case, listen to this. It's not that they said that they're not permitting any more people to invest in that product because, somebody could say they don't want to own more physical, or, it's not affordable for them to keep buying physical at this point in time. So, they don't want more people to go on board this product. They actually said that they're liquidating everything that was in that. What does that tell you? They didn't even have the physical they claim they have for existing customers. Right. So in essence, what this tells me was that it was a scam, more or less. They were claiming they have the physical, but they never did. Because if they did, they could just say, "Listen, we're not accepting anybody else investing in this product because we don't have any more physical to back your claims."
Wow.
Uh, yeah,
What's going to be the end result then? I mean, it's like do you go out and buy physical and pay? They're probably charging $1,700 for an ounce of gold, right now.
Most places I've seen now about physical gold, for example, Blake, you can't get it by anything less than $1,800 per ounce if you want to
So,
buy the physical.
okay, so if you're trading here in the spot market, then what happens if I buy and I don't, but let's just say I could, if I could pay 1,600 right now at this what's it called, an EFP or CFD or whatever it is. Let's say I'm European or I'm Asian and I see spot prices at this price. Do you buy spot here? I mean, that's I guess my question.
The
Um,
thing is
and
that
it's not relevant for me
yeah,
because I got to trade futures
it's
prices.
more than obvious. It's more than obvious that the paper market is not the same as a physical market. We already knew that because if all the claims that are on paper could actually be transferred to physical claims, there wouldn't be enough gold to satisfy them, not on this planet, but probably on our solar system combined. So we always knew that the paper market has nothing to do with the physical, but usually prices were very, 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 very close for for arbitrage reasons, obviously. But I think that under periods of stress like this one, it shows clearly that it's not a conspiracy theory that they're actually using the paper market to keep the physical market price subdued. So what happens from here is the following. There are two options. One, they try to contain the situation until things quiet down having to do with physical demand so they can go on as they are. But if something goes wrong, and with the system being so stretched and divergences being now very obvious even to people that are not looking for them, if things go wrong from here, then there's going to be a huge problem because this market might actually implode. Now, this is not the most likely scenario because we've seen that they've already invested everything in keeping the market, in check. But what if it doesn't work? You know what I mean?
Right.
Like the answer to your question on that instrument, I don't believe it's deliverable. So, you could see it under cash right here, but I don't think you can take delivery on those.
Got
like
it.
a futures contract.
So
No, you can't.
if I have physical gold, this is a good time for me to just dump it on the market if I need cash.
It would be.
I mean, if I guess if you're willing to
You could
sell it.
sell it at, people. Yeah, you give it to people 100 over spot, and they'll be so grateful.
Yeah,
You could be a
I
humanitarian.
don't think I'm willing to do that personally, but
Yeah.
it's interesting. It's interesting to see. But one last thing, Steve, before I just take over really quick for the next 15 minutes or so. You were talking about last night. We might see a big outsized move in price. So what do you think is going to happen with price then?
Let's start from the following. Because we're talking about few dollars, many people haven't realized. Silver spiked lower March the 16th. That was previous Monday, wasn't it?
Yeah, it's over here. Yep.
Yeah, from that spike low until today's high, we've seen a 31% move higher. So within a single week of price action, we've seen 31% higher. Now, imagine that this can happen within a day, even on gold. That's why I keep saying that under current circumstances, whatever you do, don't be short gold. Not because you can't make money being short gold, but because there is a chance that one day you wake up and you've lost more money than you can count by being short.
Makes
It's
sense.
a huge danger.
Got it. All right. Well, Steve, that's a greght warning, and thanks for the explanation, Dale. Appreciate it. I wanted to cover a couple things really quick regarding the FX market. I've been actually doing a couple. Well, actually, I've only been doing one thing this morning. Is I've been trading the Euro Aussie, and I've been in and out of it a few different times. We're at this 618 retracement of this big move from where the move started. Well, I say the move started. It started before that, but like the last known, like where we had a lower low really to the spike high. We're at the 618 retracement. We've got a descending wedge, and I've been buying the Euro Aussie down here at the 179 and low 20s, and I bought it. I made we were sitting there when stock futures were coming down, and we're like, man, surprised this Euro Aussie hasn't moved, and then all of a sudden it moved 100 pips. I took profits. If you were in the chat room, the Forex Analytics chat room, this one, guys, here I'll show you. Let's see. I have to go. You guys can all say hi too, because I'll come back to you. That I bought it and sold it twice this morning. So Euro Aussie, long Euro Aussie this morning, like 10 minutes ago, and it was sitting at that price. And then we were talking about just be a little patient here. And then I took mine off for 100 pips, and now I'm buying dips, and that's what I've been doing since then. I think the Euro Aussie, because we're in a bit of a risk off scenario. Now you have to be buying dips. But the thing about the market, and I want to point this out regarding the S&Ps, is it looks right now, you have to imagine we are getting a $2 trillion relief package, and the market knows it. All right. What did the market do when we got that news this morning that it's probably going to pass? Well, we failed at 2,500, and that's a big deal. Understanding that we failed at 2,500, this is the 2,500. Why it's such a big deal right now is that is the previous 9-year broken trend line, and it's the underside of it, and we just basically hit the underside of it and rolled over. So now you have to imagine, as long as we're below 2,500, the risk in the stock market is now lower. So because of that, you've got to look at what would roll over if stocks continue to roll over. My opinion would be the Aussie dollar, and you take the Aussie that squeezed past 60 cents. Okay, we almost hit a 50% retracement. We actually looks like we did this. Previous support here is acting as current resistance. My opinion is if we get back below 59, let's just call it 59.50, 59.60, somewhere down here, we start breaking back below that, and the Aussie is going to come under a lot of pressure. Again, this is more in the event that if stocks roll over, I would expect that the Aussie is going to roll over as well. So keep that in mind. And also, if stocks roll over, you're probably going to continue to see US dollar demand. So one of the other things that I'm a little worried about is that the euro, I have had orders for the last 2 days in the euro dollar to short the euro dollar at 109. Last night, I think I had mine at 109 and a quarter. The night before, when we were over here, I had it at 109 and a half. I've been basically, what I'm trying to tell you is I've been trying to short the euro dollar above 109, but I'm surprised that the euro dollar hasn't even been able to get anywhere near that. Excuse me. Sorry, I didn't mean to yawn. It's what happens when you only sleep a few hours a night. But anyway, we have not been able to get above 109, and so my fear is the euro dollar is going to come under some tremendous pressure. As soon as the stock market shows that that it's rolling over again, if it does, I think the euro dollar is just going to come under pressure. Now, it's not just the euro. You're probably going to see the Aussie dollar, get back down to 58 cents. You're probably going to see the cable, which is just so you guys can see this. Look at the cable and look where we're failing. Okay, we failed at the breakdown point. So the breakdown point comes in at just below 120. We failed just below 120. I mean, so you got the pound that's failing where it should technically, the euro dollar that's looking weak, that can't get out of its own way, the Aussie dollar squeezed past 60 cents, probably got everybody who was short out. Now, if we get back below 60 cents, that's going to be a problem for anybody who's long. Citigroup, because City Tech is long Aussie dollars. They are targeting 67 cents from yesterday. So, if the Aussie drops back below 60 cents, that's going to be a problem. You take pairs like the US dollar Canadian. Look at the lack of sell off. I look at the Canadian, and I'm not trading it right now. But I'll tell you this much. If I was short the dollar Canadian right now, I would be pooping my pants just looking at it going, wow, that thing can't even sell off. Right? And same with the dollar max. Mark Chandler, if you guys should follow him if you don't follow him. He's a friend of mine, in New York, and he's awesome. His analysis yesterday on the U.S. dollar Mexican peso, he's talking about if the virus continues, I mean, we're looking at we're looking at the risk of the US dollar Mexican peso going above 30 cents, or above 30, not 30 cents, above 30. And I mean, again, if I was short the US dollar Canadian, I was short the US dollar Mexican peso, thinking, oh, look, stocks have recovered, so I need to be long some of these emerging market currencies or some of these commodity currencies, I'd be pretty concerned. My opinion is, as long as the dollar Mexican peso stays above 23 and a half, it's the trend at this point in time, the trend is higher. Okay. So and just so you guys know, I have tried to buy Mexican pesos a couple of times over the last, week. And I think I've lost money every time I've done it. I just tried to do it, try to, short the dollar Mex. I get upside down, a couple hundred pips, which, it's would be the equivalent of maybe like a 20 or 30, pip loss in the euro, because of just the way the pip values are. I would just, close it, take a small loss, and go, man, that's, definitely not the right time. And as long as stocks stay weak, these emerging market currencies should stay weak. And you look at the dollar Mexican peso, and I know the propensity of traders is, oh, it's rallied so much, it's got to reverse. Does it? I don't agree with that. I don't agree with that at all. All right. So anyway, just a few things I wanted to talk about regarding, some of these currencies. And, I'm going to leave it with this. The dollar yen, I believe the dollar yen is going higher. I'm not long the dollar yen, but I'll tell you when or if we get above 112.30, I'm looking for 115. All right. And I am not long the dollar yen.
Well, that won't be bullish gold.
No, but you know what? In this environment, Dale, I don't.
Yeah, you don't hold as much weight on the correlations.
No, and I don't think the dollar yen is the correlations that we had been used to in the past. I think you can throw those out the door right now. This is more about dollar or yen selling institutional wise, and dollar buying, not so much gold. Okay. In a month and a half ago, I mean, if dollar yen was breaking out, I would think gold's going down. But
well, this will be a good test to see if that correlation works.
I think it will be. And again, I'm not using those correlations.
I'm not throwing it out the door.
No.
Yeah.
You should pay attention. I think if you're long gold and all of a sudden the dollar yen starts ripping above 112.30, you probably need to, just be very careful. But that wouldn't dissuade me from, a rally in gold and a rally on the dollar yen. It wouldn't dissuade me. I'm gonna trade what I see, not.
It can happen. It can happen.
It can.
Yeah.
It can, for sure. So anyway, just some food for thought on what I'm thinking this morning, and I will once again state that I think some of these cross rates like the Euro Aussie. I think the Euro Aussie is going to be a beneficiary if stocks continue to stay weak. So I'm going to continue to focus my efforts there for right now as well. So Steve, I want to thank you for your explanation on gold. I know everybody else is probably really, thankful about your comments about gold. Now, remember, guys, if you are not part of the Forex Analytics family, this is the time to do so. We started a volatility offer last week because we had so many people that have come in. It's times like these where you want to not be trading by yourself. You want to be trading with a group. You can see just since I started, or just since I took the chat box off. I mean, there's new messages everybody's talking about. Well, everybody's saying hi and good morning, and you guys are on Jumbotron earlier, and Tiana says, "Hey, first time on Jumbotron." Woo! All right, so these are, this is the chat room that we're in all day, and you can access it right here when you're using Forex Analytics. Let me get rid of the data flash. This is, who cares about economic data right now? I don't. But right here, this icon right here is where it gets you to the chat room. Okay, so once you're logged in, that's where you go. And make sure you download the mobile app. I don't know anybody else that offers a mobile app on analysis like we do. There's nobody. So, at the prices we do it, it's unheard of, but we want you guys to have access to all of our information anywhere you go. So, all right, guys, I'm going to pass it over to you, Steve. It's all yours. Dale, thank you very much. And Stelios, I know he's going to be popping in here shortly. So
I think Gregor is joining us as well, actually.
Ooh, wow. You guys are going to have the Wizard of Waves. All right. So
yep,
good luck.
Indeed. And with such volatility, I think it's, very good idea getting Gregor's insight as well in where he thinks we're going from here.
All right.
Thanks, Blake.
Thanks, guys. Hey, have a great one, and appreciate all of you and your support. And I'm glad that we could be here for you every single morning. So thanks for tuning in every single morning.
Hey, Dale.
Hey, Steve.
What's up? How have you been?
Good.
Good.
On the right side of things this morning. Feels good.
Let's see what we want to cover before we get Gregor with us, because I want to give him time to go over his charts. He's usually joining us roughly once per week, so it's nice if he has like 20 minutes to give us, as you very well know, guys and girls. Elliott Wave is, an excellent type of technical analysis that is also good in giving you medium-term targets and direction, market direction. So, and Gregor is undeniably one of the best Elliottians out there. So it's always nice to have him with us. First of all, very briefly, the S&P has now broken through this descending channel. We've talked about it. Quite a massive update yesterday. Of course, somebody can say we also have quite a massive update in 13th of March, and the next day was an even more massive down day. After all the trillions and trillions and trillions of monetary stimulus that we got, I think that there are better chances that this is going to be the beginning of a little bit of a bigger rebound. So although I'm still bearish in the medium term, I'm still holding my long position in the short term, and I think we can actually make it. I mean, we can get rejected from there. Blake already showed the technical reason of why we can get rejected from that high that we saw at 2,500. But I think that there is also a decent chance that we might see 2,600, even 2,700. So something like that before we move lower. So bottom line, I wouldn't be, that convinced that, this rebound is done. I'm more or less convinced that there is more downside, but it's a little bit tricky to say from where. So that, covers basically all the US indices, because, more or less what one is going to do, the rest are going to do. Russell remains weaker than the rest. DAX, more or less.
Steve, can you post a link in the room for Joanna Caldwell? She wants, how do I find out the info regarding membership?
Oh, yeah, absolutely. The easiest thing you can do, I can show you live actually. If you go to Forex Analytics, this is our homepage, right? On the top right, there is a sign up button. Now it doesn't say sign up here because I'm signed up, of course. So it just says go to dashboard. But you know, anything you want about information, homepage, features, mobile app, webinars, blog, education, about this. This is also a few words about what we do, what we cover, etc. Our team, who we are, and pricing. Okay. So, you know, all the links up here in the homepage are going to be more than enough to give you, you know, a very good idea before you sign up. Also, on the homepage, there's a video here you can click. And if you go to our YouTube channel or through the webinars here, webinars, videos, playlists, you can see a few things about us through the playlists, in essence. Okay.
I've had people say this to me, Steve. How about you when you maybe open an account or join somewhere and they go, welcome aboard. And I'm always curious as to whether or not it's the Love Boat or the Titanic. Welcome aboard. Go ahead, bro. Sorry.
Oh, by the way,
hey, welcome aboard, Steve.
Welcome aboard, Greg. I think we have Greg.
Oh, Grega, welcome aboard. Report to the starboard side.
Let me see, and let me unmute him because he didn't find his. Okay, Grega.
Swap the decks.
There you go. We can hear you loud and clear.
Welcome
mate.
aboard.
What did you do? Did you throw the kids out in the snow?
No, they are watching cartoons, but yes, it's really crazy here. I mean, it's 25th of March and it's snowing like crazy while we didn't have any snow at all this winter. So
that is indeed weird.
Yes.
Okay, so I'm gonna wait a little bit before I visit again. I don't want to come with snow. So, Grega, since
Yes.
I'm here every day, but we don't have the luxury of having you every day, why don't you grab the screen and let's go together over some of the most important markets here. I know that everybody wants to have your outlook on, first of all, where are stocks heading from here? A. B. What do you think is going to happen with the dollar from here? C. What do you think is going to happen with precious metals? So I think we should at least cover those. So why don't you share the screen? I stopped sharing mine. And take us over those, and let's see what else we can cover in the time we have.
Okay, just a second.
Okay, something's coming through. Yeah, there we go. We have your screen.
Okay, perfect. So we can firstly cover. Let's just begin with, since you mentioned dollar, right? Let me take a look at the euro, at the dollar. So on a bigger scale, I still think that US dollar index here is going to reach higher prices, and ideally we are waiting for these 2016 levels to be taken out, and maybe this is going to occur within current blow-off move. So maybe we get a little bit more upside with an extended structure to attract maybe even more interest into dollar longs. But then actually I would be looking and expecting a reversal. So what I'm looking and referring to is an ABC X ABC formation that will take us to a new swing high. At the same time, obviously, I'm looking for euro dollar to fall beneath 2016 lows. Now, if you will take your wave C and wave A projections, you will also came out with levels around 105, 106. If we
just
take
to
a
put
look,
things in context, when we say turn lower from there, okay, we got a new high. Let's say we're there, and we turn lower.
yes.
What would your projection be for a turn lower from there?
From there, I would say minimum objection back towards 100, and then it depends what kind of a drop we see. If there would be an
in
impulse
the longer term count, where do you think we're going next? If you had
on
to
the
assume.
longer term count, I would say that we are stepping into a big bearish phase. At the same time,
that would bite very well with macro thesis here. I mean,
yes,
trillions and
exactly.
trillions and trillions of liquidity going in the market, and once the liquidity issues subsidize, I think that we're going to be left with a big bear market in the dollar. So I'm 100% with you.
Yeah, but still, the current cycles, because the current volatility is so strong, there's still even a chance that euro dollar can still drop towards parity. So, maybe it's not, it's a very good observation, let's say on the longer term, but maybe we'll have to wait till the end of the year to see maybe something to be turning around actually in this field. Now looking,
I
maybe
think that under this current environment, things might move a lot faster than that, Grega, because these are not
that's also true. Yes,
normal market conditions, right? I mean, yeah. So things might unfold a lot faster than many believe.
Okay, so maybe it's more interesting to see what, for some of our listeners, what is going to happen from here. Let's say till the end of the week. Well, I still think that's a healthy uptrend. Okay, and that we are actually here just consolidating. I can clearly see that this is a very slow price action. It looks to me like a wave 4. Obviously, there is even potential room available to test lower levels here around 100 would be my maximum here for this 4th wave. But generally speaking, I think that this 5th wave could really start going by the end of the week. If I compare it to the euro dollar, obviously we have a very similar situation there. There you have this 4-hour. Okay, you're now at the 38.2%. So look.
Grega, I think we lost you.
You should have let him talk while he was here.
Something probably happened with his internet connection or his microphone. Let me write to him.
Yeah. He's out in the snow with the kids.
Let's see if maybe it's just something wrong with his microphone and he has no idea. Let's see.
All right.
Yeah, perhaps something happened to the line due to the snow. Who knows? Okay, let's give him 30 seconds and then I'm going to take over until he can make it back. Okay, so bottom line, just to clarify here what Gregor was saying. So because we have a question, for example, from Gautam. Gautam says, I have bought Euro USD, think major bottom in place. Already Gregor said, and I don't disagree with that. Let me grab the screen until he can make it back. That this looks like a consolidation. And since we know that Euro USD is more or less inversely correlated to the DXY, because 58% of the DXY is the Euro USD, just look at the Euro USD price action. I mean, every single up day has left behind a very long upper wick, which shows that sellers are actually not giving up. And this looks to me like a bear flag here, right? So I wouldn't be surprised, exactly as Gregor was saying, if I see one more leg lower from there towards 105. 105 is a very interesting area of support. You can see it, dates back to 2015, earlier 2015, 2017. We did have a short period of time that we traded below it, but all the rest of the times it acted nicely as sorry, writing to Grega. He's asking what happened. So probably he has no idea. So his connection is still up. Let me see. Grega, can you hear us, mate? Oh, you see. Okay. Yeah, something is kind of wrong with his connection. So I think there can be more downside from here in the short term. Now, you all know that I'm very bearish the dollar in the medium to long term. But, as I've said many, many times, we don't yet have the technical signal that will tell us that we need to sell right here, right now. So I have my eyes opened, but look at this. I mean, this is what I had drawn on my chart as well. I mean, like a little pennant here, right? So this is the DXY. So on the DXY, I see a little pennant here. So I think it's very likely to see one more push to the upside. Why not over the 2016 high? There is the 2016 high at 103, what is it, 60, 70, 80, whatever it is. So I think we can see another move over that before we can actually turn lower. So Gautam, you might find yourself out of the money. I wouldn't be that worried, right? Because as I said, my medium to long term outlook for the dollar is that it's going to move a lot lower from where it currently is, even if it first moves, 3, 4, 5% higher from where it is at the moment. So depends, to tell you if you have a good entry point or not. It all depends about what your time horizon is and what your risk tolerance is. So I don't know if you're a short-term trader, in which case most likely you can't tolerate being out of the money like 3, 4, 5%. But if you're a medium-term trader, that shouldn't be much of an issue. So you're the only one that can answer that question. But in the very short term, I don't see this rebound being bullish. And not only in the Euro USD, but here is the Kiwi. So far, this Kiwi's rebound can be just a pennant, right? Here is the Aussie. Same deal here. I mean, I'm not saying they can't unfold higher, but so far, I'm not really that impressed about the rebound we've seen. That's all I'm saying. So that's my outlook. Now, having to do with, let me open the question box. I think as usually, we had questions about the metals. Good morning, guys. Thanks for your job you do. Questions for Steve. With your analysis earlier this morning on gold, silver, I wanted to ask if you're still bullish on silver for later this year. Oh, I'm super bullish. Silver with, a long-term horizon. Yeah, I'm super bullish silver and gold with a long-term horizon in mind, right? So just to give you an idea, so Market Vision, sorry, Real Vision, it was like a year ago. Yeah, here it is, 22nd of March. That's when it was published. That's me. Gold, short-term bear, long-term bull. That was, I gave that interview not 22nd of March when it was posted. It was like a week earlier, like 5 days earlier. So to put things in context, that was 22nd of March of 2019. So that was there. We were somewhere here, right? When I gave the interview. And I said that, I'm bearish in the short term. And we did move from 13 something that we were at 1260, but long term bullish. And I was actually, if I remember, mentioning this specific formation. You can watch this video actually if you want. Thinking that we will eventually break through this longer term formation, and it's going to be a one-way street from there. So I wanted to show you this because I'm not blind to technicals, right? I've been short gold. I've had a short bias in gold for periods of time, but my thesis that gold and silver are moving much higher, has been there, since a long time ago. Actually, since we retraced from like 1900 down to like somewhere 1300. That's where I started being, very bullish in the long-term gold again. And I thought that all the move lower towards 10,050 was a very good, long-term buying opportunity, because of course, you can't be sure where it's going to bottom, but for all the right fundamental reasons, I was more than sure where it's headed. Can you look at pound and euro pound? That was going for Gregor, but you'll have to settle for me today, since unfortunately Gregor has connection issues. So pound, some days ago, that's what I posted here, right, on the chart, and I haven't changed it. This looked to me like some type of a pennant, right? You can draw it like that, you can draw it like that. I mean, doesn't really matter. And I said very clearly that the first area of resistance is up here at 120. You can see why. If I zoom out, you can see that this 120 area has been extremely strong support from the lows that we saw past the Brexit vote. We retested it again end of summer last year, and we're back testing that previous area of support as resistance now. So obviously, an initial rejection at least was warranted, and that's what we're seeing so far. Now, can we rebound higher from there? Yeah, sure we can. But, as long as we are below 120, I have no technical reason to advocate for being long the pound against the dollar. Now, do I believe that eventually the pound is going to move above 120 against the dollar? The answer is absolutely. Okay, absolutely. But once again, as we showed on the Euro USD chart and on the DXY chart, I think that in the short term might not be a good idea buying here. We might need one more, flush lower towards, why not, 110. 110 is a nice rounded level. It's also a very nice fib extension. It's the 161.8% fib from the rebound we saw from the September low to the December high. So why not? Why not see a move towards 110 before we can see, a much larger recovery for the cable? Okay. Last question about silver. I like physical silver, though I don't like the spread of around $1.23 for Eagles. Do you see that spread narrowing? No, I don't see that spread narrowing easily. It might narrow temporarily, but as long as the paper market refuses to follow higher, it's not guaranteed. So bottom line, what I'm trying to say is the following. You might get a much better spread to buy physical, but it's not guaranteed. So if you really want exposure in physical, pay the spread. And in the grand scheme of things, long term, in my opinion, it's going to play no role. And I'm going to explain what I mean. I mean, for example, let's assume that you paid a premium a few days ago when silver was trading at 11, and you actually bought physical for $13 per ounce. Okay, so let's say you paid back then a very hefty premium, because that would in essence be a premium of like roughly 20%. Okay, so let's say you paid 20% of a premium to buy physical 3-4 days ago, right? You would have already been in the money, even considering the premium. Now imagine at some point in the not so distant future, I really think that silver can be trading at $30-40 per ounce easily. And when we're there, you won't care that much if you ended up paying a little bit of premium when you actually bought it at 13, at 12, at 14. I mean, it's going to make no big of a difference. It's going to be like losing, one up day, something like that, like you bought one day later or whatever. So, if you want to have some exposure in physical, I would actually buy regardless of the premium. FX Trader, 30-40, no way. Really, no way. Should I remind you that silver was trading at $50? Gold would be at 5,000 by then. Yeah, sure. Why not? Why gold shouldn't be at 5,000? I want to know why gold shouldn't be at 5,000 at some point in the future, because I have no argument against that, against gold being at 5,000. I'm not a Bitcoiner, so I don't believe that gold can be at 5,000 this year, for example. Okay, so I'm not talking about like an appreciation of something like 250% like within 6 months. But is it going eventually to 5,000? Absolutely. I mean, as long as this reckless monetary policy and currency debasement continues, which we have absolutely no evidence whatsoever that it's about to end anytime soon, I don't think there is an alternative for gold eventually reaching 5,000. Okay, and Bitcoin by 30,000. Yeah, Bitcoin can be by 30,000 then. You know what the alternative is? Bitcoin can be at zero by then also, because that's a problem with Bitcoin. You know, it has an equal chance of being at 30,000 by then and at zero. So I'll take my chances with gold, and you can go ahead and take your chances with Bitcoin. But at least, you know, we both know what horse we're betting on, right? At least I know that my money is going to be there because gold continues to be real money. Bitcoin is digital risk. So yes, you will be taking a huge risk, but you might be compensated more. I'm going to be taking no risk in the sense that, you know, gold is the ultimate store of value. So there is no chance that my money is going to zero. You have a chance of your money going to zero. So it's up to what what you prefer. Gold can collapse to 1,000 again. Sure, everything can happen, but at 1,000, I'm going to be happy buying more. Let me see. How many cases in Greece? Very few, actually. For Xgal, thankfully, the government here took measures very, very, very early. And so far, we've had less than 20 people dead and something like 700 confirmed cases. And the good thing is that the pace is actually not accelerating. So it seems that we've actually managed to contain it before it goes out of hand. So, you know, thankfully, and let's hope it continues like this. But, you know, generally, people seem to be doing the right thing. So I'm quite optimistic. So we had a question about Europound as well. So let's have a look at Europound. Now, clearly, Europound has been correcting that violent move higher. But I have to admit that so far, I don't see something extremely bearish. So, you know, this looks to me like some type of a consolidation. So I wouldn't be surprised to see, you know, more upside before lower eventually. Now, for the nature of this currency pair, which usually is quite subdued, you know, the last few days have been quite volatile, you know, admittedly. But I more or less, I believe, as long as we keep closing above 90, 70, you know, we might see in the short term more upside before we see more downside. Europound has been very tricky, though. We were talking about it the other day here on the webinar. I mean, it keeps swinging more violently, once lower, once higher, first taking out previous lows or previous highs, previous lows, previous highs, and then usually turning violently lower. So I have to admit that, you know, it's been quite a beast, right? I haven't had exposure in Europound for, you know, quite some time. And to be honest, I'm not looking forward to having some here. But, you know, if you're about to trade it, that's what I think about it as we speak. Will dollar index go up with gold price? There are periods of time that we've seen gold go up with the dollar. Usually, that happens under risk-off scenarios. Usually, when they move together. But let me say it otherwise. For very good reason, most of us here have a very bearish bias having to do with the dollar in the medium to long term. Now imagine gold has been doing, you know, fine, priced in dollars, with dollar moving higher. Imagine what gold can do once the dollar stops being a headwind and starts being a tailwind, right? That's all I'm going to say. Dale,
Yes.
it's interview time, I'm assuming, right? If your guest is here.
Yeah, he is. He's been here an hour because the message is confusing for my guests.
we're not sending messages to your guests. The only person that communicates with your guests is you.
No, well, I find them on Twitter and they see the
Okay,
message,
so
so
you
they
can
think
DM them and explain that the interview is 1 hour after the webinar starts.
okay, and their
Okay,
followers.
who do we have? Who
and
do
their
we have today?
followers, I'll do that too. I'll DM their followers. We have
They're
Christopher
responsible for their
Inks.
followers.
Christopher Inks is with us from Texas West Capitals. So, Chris,
Okay.
thanks for hanging around. Thank you, Steve.
Thank you, Coach.
Okay,
Enjoy the
so
interview.
I'm going to set you up now, Chris. Well, I just lost you. Okay. Make you a panelist. And I'm not sure if you want to be called Christopher or Chris. So, Christopher, welcome to Face. How are you, buddy? Nice to meet you. Hope you have a mic.
Hey there. Hello.
Hi, Christopher. How are you?
Oh, great. You can hear me.
Yeah.
I'm doing great. First time I've ever used Zoom, so I wasn't sure how all this software here works.
Oh my God, Zoom is the stock is Zoom because of the virus and everyone telecommuting. So,
No doubt.
yeah. So I really appreciate you taking time during these real volatile markets and coming to talk to us. Nice to meet you. We do have a screen share here for you,
Okay.
Christopher. And if you just hover your mouse over the green share box, you'll see it on the drop down menu.
Oh, okay. All right.
And you click that.
Click that there. Okay.
And then share your screen.
The screen there.
Beautiful.
Like that?
You
Oh,
got
wow.
it.
Fantastic.
See? You're not like me. They dragged me kicking and screaming into the 21st century. I'm known as Low Tech Dale or No Tech Dale. So I understand that you trade and you teach and you use Wyckoff, or is it Wyckoff?
Wyckoff, yeah.
Okay, Wyckoff. I know a lot of people. I'm familiar with that name. It goes back to God when I started in the 70s. Okay, so I'm interested in the evolution and how people make this trading journey, and you must be too as an educator. So, how did it start for you, Chris? What were you doing prior to becoming a mentor and a trader?
Well, I mean, mine started way back in the day. I like most people, I come from just a blue collar family. My dad was military, and so I kind of grew up, all over the world. And the one thing I found out, especially as I exited my teenage years, is that I really didn't like. I really didn't like being told what to do. I didn't like having somebody tell me that I had to do this and that, the other. And so that kind of told me, immediately that I wanted to do something on my own.
Okay.
Where I wouldn't have to worry about.
So you weren't interested in going into the military since you didn't like to be told what to do?
Well, growing up, most military children will tell you, most of us military brats will tell you that, we kind of grow up in that environment. So we more or less just assume that's what we're going to do.
Oh, okay.
And then we kind of, if we're lucky enough, I guess, we kind of figure, you know what, that isn't really the best thing to, potentially the best use of our resources there. But I figured that even in the even the civilian world, I didn't like the idea of having a boss, of having somebody that I had to answer to, and constantly check my my thoughts and my ideas. So for me, trading was the route that and business ownership was the way out. It was the way that I didn't have to work for somebody else.
Right. Okay. So when did you start, and did you have any mentors yourself or major influences? I'm looking at your chart setup, and you have a lot of yellow horizontal lines. So I believe you're into supply demand zones as well as fibs. So we'll get to that. But did you have a teacher, or are you self-taught?
Yeah. So what I did was, knowing that this is what I wanted to do, I figured, I can't even remember who it was back in the day, but back about 95 or so, right as I was getting out of high school, I subscribed to it was $200 a month, I believe. And it was a one-time a month. It came in the physical mail. It was a newsletter
Okay.
from a guy
Who
who was
was
a
it?
stock trader.
Do you remember?
I'm sorry?
Do you remember the name?
I cannot, I was sitting there this morning. I was like, man, I know this is going to come up. And I just, at the moment,
Okay.
his name escapes me.
Okay.
But that's literally where it started. And like
Okay.
most retail traders, I went out there and, I had this idea that trading was easy and, I was going to make a lot of money really quick. And so after I lost a lot of money, I
Right.
decided that, I didn't want to give up. I wanted to figure out how it was really done. And so that's just kind of been my, ever since that time, there's been my kind of movement through this. It's just trying to always figure out, always understand the underlying why do things happen. It's not enough for me to simply understand that, if price prints this particular pattern, it might do this or this. Why is that going to happen? And that's why I kind of ended up with Wyckoff
Okay.
as I progressed.
Okay. So yeah, what that was a rhetorical question because we talked about Wyckoff. So I'm interested in when you started using Wyckoff, was it a learning curve to get used to the methodology? And why don't you explain a bit about Wyckoff and this setup? What I wanted to ask you is you got this newsletter in 95. So that tells me you were trading before crypto became popular. Have
Yes.
you made a transition and gravitated more towards crypto than other instruments?
I don't know that I'd say more so. I guess
In addition to then.
yeah. I mean, when I
Okay.
started again, it was stocks, and then I moved on and went into options. Toward the end of the '90s, beginning of 2000s, and then a few years after that, I kind of got into forex and really enjoyed forex. Forex is something that I enjoy quite a bit. And so, it's funny when I came into crypto back in about 3 years ago, I noticed that a lot of the bad stuff that you see in forex, manifests itself in crypto as well. The get rich quick overnight. My system here, do these three things and you'll be a millionaire next week, kind of thing.
Huge
High
leverage.
leverage.
Yeah.
And so, for me, it's a natural kind of, I guess, kind of move sideways there from forex into crypto because there's so many similarities between the two markets.
Okay. Well, we had the first real test of crypto being kind of a hedge against risk, which it turned out not to be. Everything liquidated out during this panic, but the recovery has been quite impressive. What are you seeing here with your horizontal lines and your strategy that you teach? What's your view here?
Well, the first thing, let me go ahead and zoom out here. I mean, here's the real picture. This is kind of what we're looking at right here.
Okay.
And so I've got Coinbase up here, so it doesn't have all the previous the other bit of 2013, 14, all those other episodes there. But basically, what we can see here from the 2017 high up here down to the 2018 low, and then this recent low here is basically this appears to be printing a reaccumulation trading range here. And that, that of course there swings from that almost 20,000 down to that 3,100 level there. But what I find most compelling about this, because this is a range that I actually drew up back there in February of 2018 when we had the strong move down followed by the move up. Mm-hmm. And so we get to this point here where we're at, and what we see is just a strong drop down. It hits the EQ here of this September monthly candle right here.
What's EQ stand for? Equality?
I'm sorry, the
ST?
I'm sorry?
You said it hit the EQ. What's
the
EQ?
the middle here of this
what does EQ stand for?
There goes my brain. It just completely dropped off.
Okay. So you use something, and the definition of EQ is that a Wyckoff term?
No. That's just the just the middle of this
Okay,
of this band
equidistance.
structure right here.
Okay, all right.
Yeah. So I mean, as you can see right here, it just kind of hits that right there and bounces right back up. But the big thing here is that you have this strong drop and this immediate return right back up into the trading range here.
Yeah.
And so whereas we have a lot of everybody right now, you know, crypto Twitter and social media and being what it is, you know, everybody wants to be bearish below looking for these lows, which, you know, while possible, if I take a look at this right here, it doesn't look very likely. Again, it's this return back into this trading range here that is really compelling to me here. But you know, this is still the month. There's still the monthly candle here, so we still have to see how it closes out. But for right now,
Yeah, that's the biggest one of the biggest wicks on the whole chart.
I'm sorry?
That's one of the biggest wicks
Oh, yeah.
on the whole chart.
Yeah, absolutely. A huge amount in here. And so what we would usually look at with this kind of volume coming in is we kind of look at it as what we call a terminal shakeout. And the goal of the terminal shakeout basically is it's that last move down before price starts advancing bullishly. And the idea behind it is that anybody who's going to sell is scared into selling. At that point, if you're holding and you don't sell, then you're what we consider to be, you know, the strong hands, those that you want, because what you're trying to do with this trading range here is you're trying to get anybody that's going to sell short term. You want them out. You want to be able to hold on to what they have, so that way price can move up unimpeded and make these new higher highs. And so you get to this point right here where you have this spring, this terminal shakeout, and that just scares the bejesus out of the market. Everybody trying to sell, everybody getting bearish. And so not only do they get rid of what they have, but then they short, and then they get caught on the wrong end of that as price, of course, comes back up.
Yeah,
You know,
I
and
mean,
then-
they really would have been able to shake out everyone if you go back to that monthly chart, if they had taken out last January's lows.
Oh, no
like
doubt.
they
No doubt.
held, you know, that
Yeah.
would have taken everyone out of the trade.
Yeah, exactly. But you know, again, I think the biggest problem people have when they consider Wyckoff as a trading strategy is this misunderstanding that you know the retail is the engine of the market. The retail kind of says, okay, you know, the market, once we get involved, we're going to kind of keep the market moving in one direction or the other. But it's these larger professional accounts that kind of nudge the market around. And so, you know, when you have things like this drop back here in November of 18, or this drop that we had here this month, you know, it's initiated and started by these, you know, these larger accounts. But at the end of the day, the follow through comes from retail.
Yeah.
And so in this case right now, so far anyway, remember, this is still a monthly candle, so anything, you know, anything can happen. But at this point here, retail has decided that this low right here at that 3,800 level here on Coinbase is it. That, you know, they've decided that's their buy level. And so price could not actually continue down below that January low there yet.
So what do you look for going forward? A breakout of this kind of a big continuation formation and new all-time highs? And what will you need to signal that we're there? Was this month, if we close like this, enough?
I believe so. I mean, if we zoom, I mean, just looking here at the monthly, this is an amazing candle right here. Even though, you know, even if it were to close out like this, you know, you've got supply slightly in control. But what's more telling about this candle is this lower wick here and the inability of supply to continue to control.
Okay.
And so, you know, Wyckoff is all about your relationship between price action and your volume, and not just locally, but between different parts within the trading range. And so what we see here is we see this this volume increase here, and we see this candle spread here continue to get smaller and smaller. And the more it does that, the more bullish this becomes, because you're exerting more effort down here, but you're getting less of a result if you're supply oriented. And so then what we do is we kind of zoom in here to smaller time frames. Let's pull it in here a bit.
Okay.
And so what it is if this is a as it appears to be a spring or terminal shakeout, then we should generally expect a pretty easy movement up and through the rest of your, kind of what we saw back over here in early 2019. We had this pretty easy movement. And so we should see pretty much the same thing as price advances through here, if this is that spring or that terminal shakeout area. You know,
Okay.
again, we did have the drop. We had the pull back up, and then we had a test here.
Yeah.
And of course, then the volume here, much lower here on the test than what we had on the drop there. And that's usually what we're looking for to kind of indicate that it is a successful spring, it is a successful test, and price should be headed up. So
Okay. Does Wyckoff talk about shallower retracements after a spring? Like, for example, with this setup here, the fact that we had that washout low, that if we do get a correction, that perhaps all we should be looking for is maybe 38%, not 50 or 61.8, and that would be a demonstration of the relative strength of the instrument.
yeah, it doesn't quite go into you know, fibs and you know, percentage retracements and whatnot.
That
But
you just added that to your.
yeah.
That's
I've
not
just got that
Wyckoff.
because you know, with what I do with our people that I train and whatnot, and I discuss things with, you know, my goal is to let them know that, hey, all these different ways of looking at the market, whether it's Elliott wave, whether it's Wyckoff, supply and demand structures, whatever you're doing, it all gets you to the same place if you do it correctly. And so I tend to leave a lot of different things on here so that way our members are able to decide what makes the most sense to them as they trade, and then they can kind of follow along as they're learning. So that's why you'll see often many different things on my charts.
Okay. All right. Anything else that any other instrument you wanted to cover besides Bitcoin?
Well, I'll tell you what, you know, again, right now we talk a lot about what's going on with the stock market.
Okay.
I actually published this here back in March of last year. And so being that I'm Wyckoff oriented more, you know, than anything else, it's the whole supply and price action, volume and price action. I had been talking from about May of 2018 about this whole structure here, this sideways movement that we had, this trading range as being distribution. And I'm sure you can imagine that back in May 2018, I got a lot of funny comments. And from then, you know, everybody wanted to be bullish. I didn't see it in the volume. I didn't see it in the price action. So, and then in March of 2019, I printed this here and I kind of looked at what we were looking at structurally compared to how it looked back around 1987. We had Black Monday.
Yeah. How old were you then?
Let's see, 87. That would have made me, what was that, 13?
Okay.
13.
All right. Were you short?
I wasn't even in the market then. I knew I was,
Oh.
you know, growing up in the 80s, I knew, you know, you had all the movies of the corporate takeovers and Raiders and
Oh yeah.
all
Gordon
that.
Gekko.
So, you know, greed is good.
Gordon Gekko was my hero.
Yeah, there you go. Exactly.
All right.
Exactly.
Okay.
So I guess my whole foray into trading probably started, you know, had its beginnings back then, but I was not in the market obviously at that time. But nonetheless, you know, we put this up here and I was looking at around 30,000 on the move up. And then of course, you know, as we see, we got pretty close to that.
So we've taken out the megaphone lower dotted line on yours, where the S&Ps it would come in around 1800, but
Yeah.
it looks like we took it out before we turned. And
Yeah.
then you have it looks like equality under that lower megaphone line that could take it to 12,000. Is that what
Yes.
you're looking for?
Yeah. So right now that's kind of where I'm at with this. Let me pull up the mini, the 30 here. Not the mini,
Oh, you do Elliott too. You do everything.
Oh, yeah. I do quite a bit of a lot.
All right.
Getting in there. But yeah, so let me go and pull up. Oops. Let me pull up a better chart here. I've got a little bit more time frame on here. So this is what if we look at the 2000s here, this is basically just reaccumulation. So you had your dot-com bubble,
Yeah.
your dot-com crash, you had your
Yeah.
2008 financial crisis, creates
Right.
this spring down here into the 2009 lows there in March.
Right.
And then we have this big move up from that. And so again, you know, when we're looking at this, now that we're taking out this local kind of reaccumulation range from 2016, that gives us our first bounce. And the way I'm looking at this right now is basically I've got this A wave coming down. If this follows through, as I've been talking about for the past year and a half, I expect the B wave back up toward the bottom of the trading range to get rejected.
Do you have
and then
this in
we'll
S&P
be marked
terms?
down. I'm sorry?
Do you have this in S&P terms? I think more people trade SPX than Dow because
Let me
of
see
the
here.
different products, the minis and
Yeah,
the
yeah, yeah.
micros.
Let me see
Okay.
here. Yeah,
Thank
there
you.
we go.
All right.
Let me go ahead and pull this in here a little bit. There we go. Again, same idea. Let me see. Oh, I don't have anything. It looks like I lost it. Having a little issue with TradingView the last couple of days, but really enjoy the
Okay.
platform.
So you think we could recover back to about 2,800? Is that back to S1 or something like that?
Yeah. So what we're going to look at right here is we've got this local trading range again back here for 2018 till now. Zoom in back there. And so the bottom of that, usually what you're going to have, if this being distribution here, which is clearly what it appears to be with here, what you'll usually have is you'll have a return back up to the bottom of this trading range, maybe a little bit into it here, and price gets rejected there, and then it comes back down, and that's the markdown. Then so you're looking about this move potentially up here to around 25, 2,600 maybe.
We almost got there. We got to 2,500 last night.
Oh yeah, I see that right there. Yeah, exactly. So again, it might head up a little bit higher, but basically what you're looking for is you're looking for weakness as we get up into this trading range here, and you're looking for a solid rejection that kind of sends it back down, and that's your kind of your kiss of death right there.
Could it get to the upper yellow line?
It shouldn't. If it does, I would be very, very cautious about any downside on that. Because
Why?
I'm sorry?
Why?
Because if this is distribution here, then you should expect that the bottom end of this trading range holds as resistance. If it's pushing up through that, then what it's telling you is there's not enough supply coming in here. Supply has been worn out here. And if supply is worn out here, there's nothing to keep it from going up higher there. Is really the idea.
So you don't think we could correct 50% or 61.8 of this decline? It looks like you're looking at maybe 38% at that first yellow line.
Let me see here. If we look at this here, yeah, that gives you a 50% right there. Yeah, I would be looking at if we're looking at fibs here, I would expect a max of that 38.2 right
26.440. Okay.
Yeah.
I have a lot of confluence there. All right.
Yeah, exactly. I would get really suspect anything popping back up over the mid range here of this trading range.
Would suspect include being open to the possibility of a new high?
All right, glad you asked that because that's the other part of what I'm looking at here. So when I published this, within a few months after that, I was already discussing the possibility that what we are seeing here could be a wave 4 and how that would play out. And so I went ahead and updated with this idea. Finally, I was talking about it long ahead. And then in December, I went ahead and published it. The idea that we've got an ABC, 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 and then we'd have an ABC down here for E.
And then it goes back to the top of the megaphone.
Yeah, exactly.
A broadening formation will drive people bananas, won't it?
It would. And, this inverse, this megaphone pattern, this inverse symmetrical triangle, it's pretty rare compared to what we usually find as far as patterns go. And so, I leave this open as a possibility, but when I look at it, my big issue with it is this strong
the velocity.
Yeah, you went from way up over here.
Yeah, wiped out 4 years of gains in 3 weeks.
Yeah, exactly. And so while I do still leave that open as a possibility, and as I've told our members, don't necessarily count it out. I still lean toward that further down. Now, why would this happen fundamentally? Well, we've already got the Fed doing what it needs to do. It's providing liquidity. Hey, unlimited asset purchases, 0% interest, all these things. And so what we need to see now is we just need to see, this drop right here is fear. If you look, it's fear of the unknown.
Yeah.
And so if what's going on with the coronavirus becomes known, if we come up with some kind of vaccine, some kind of effective treatment, some kind of, the peak of cases is hit and we start backing off of that, all that stuff adds up to the second thing we would need, in addition to that Fed easing, that could potentially lead to this continuing up. And so I'm definitely open to the possibility, but it's one of those things where it has to prove that it's going to do that, because my default position is this further downside.
Okay. And I like that yellow line. I actually had that 1550 level was big between 2000 and 2007. Look at that. That was a
Yeah.
major breakout.
Exactly.
Yeah.
And without a retest of it,
Right.
it makes a lot of sense to come back and retest it. So
Yeah. I tell you what a great guest you are, Chris. And, I can learn from you.
Well, I
We can learn
appreciate it.
from everyone. So, and
That's
I've
right.
been doing this a few months. So, what's the best way for people to follow you, get involved with you? If you'd like to show your website, that would be fine right now. If you want to do that.
Sure. So we run a website here, howtotradetowin.com. And this is our basically, your way to get involved with us. We provide a lot of information via Discord.
Okay.
And we do have I have an educational video series where basically we start with how the market works and why, market psychology, and then into how to properly use indicators and price action patterns and whatnot. And then we move into Wyckoff, and I'll have an Elliott Wave series up soon as well. And you kind of get access to all of that by joining us through here. But people can also follow me on YouTube at Texas West Capital on YouTube.
Okay.
As well as on Twitter at TX West Capital.
Okay. And let me guess, you're located in Texas.
I am San Antonio. Yes, sir.
Trinity University and the Riverwalk.
Riverwalk, which is actually pretty empty right now.
Yeah. Let me, before we say goodbye, what is your take on this pandemic that, it's like 100 years ago we experienced something like this? What are your thoughts as far as, there are a couple of sides, do we risk people's lives or do we save the economy, which could also cost people lives if we don't save it? What do you think is going to be, just a guess and your intuition of how this plays out? Any ideas?
Right now, I guess my biggest concern of it all is, with my educational history, it's all about government, really. And the one thing we know is government, uses every opportunity to take into itself more power. And so,
Okay.
I'm fearful that what we're going to see is these calls for more power, emergency powers right now, leading into, things that they don't let go of in the future. But how do you deal with this? I mean, at the end of the day, I can understand people. I'm very much anti-big government myself, but I also understand that, people are going to be stupid and they're going to get out there and they're going to hang out. I mean, Florida beaches recently,
Yeah.
Bondi Beach in Australia being another thing. People just don't know when to stop. And you've got to, as a government, you got to, kind of step in there. Unfortunately, it's one of the things you have to do and say, listen, you got to stop. So, for instance, here in San Antonio, we've got, we went into lockdown last night. So only.
Is it being enforced or is just a stay-at-home order?
Oh, no, it's going to be enforced. The police are going to be kind of pulling you over and whatnot if you're out and about, making sure that you're allowed to be out and about.
Okay.
But supposedly, I'm not sure how much that's going to be enforced because, they say essential travel, so grocery store or hospital or whatnot. But,
Yeah.
So where's this going to go? I don't know.
Okay to say I don't know.
I really don't know. The sooner we get this done, the better. But until we do everything, I think the government's doing right. You've got to address the market stuff.
Yeah.
But a lot of damage has already been done. A lot of people are out of work. A lot of people being laid off. A lot of businesses going out of business already.
Yeah, I don't think that traders and trading educators are included in the rescue plan. So I don't know about you, Christopher. I'm not going to hold my breath for a check. I'm going to have to scalp it to make it. What do you
That's
think?
right. That's right. Exactly. But thankfully, it's it's a good skill. It's just a fantastic skill to have.
Yeah.
It really kind of sets you up for times like this.
What a great interview. I'd like to have you back, Christopher. And like it or not, you're now my trading warrior brother.
Well, I
And
appreciate it.
yeah, and I really do. I got some great looks, and thank you for edifying our face community today. And you and your loved ones remain untouched, and keep passing it forward and teaching people how to fish, buddy.
That sounds great, man. You take care. Thank you so much.
All right, everyone, that's Christopher Inks. You can follow him on Twitter at TX West Capital. And we'll see everyone tomorrow. Following up on Bitcoin, we're going to have at Crypto PhD, Demelza will be with us. So everyone have a great day. Stay safe. I hope that you and your families remain untouched, and we'll see you tomorrow. And don't just count your, I don't know, anything. Count your blessings. Talk to you later. Thank you, Christopher.
Thank you.